Let's begin with what could be the most important Ethereum adoption story this week. Robinhood's brand new Layer 2 blockchain is off to an impressive start, built using Arbitrum technology. The network officially launched on July 1, and within just days, more than $70 million worth of ETH had already been bridged onto the chain. For a newly launched blockchain, that's a significant milestone. But here's why this matters even more. Unlike many alternative chains, Robinhood Chain is deeply connected to Ethereum. ETH isn't just another supported asset. It's actually the native gas token used to pay transaction fees. That means every user, every transaction, and every application built on the network creates additional utility for Ethereum itself. And that's only part of the story. The chain also supports tokenized stocks. Imagine buying and trading blockchain-based versions of traditional financial assets, while using Ethereum as the foundation behind the scenes. This is exactly the type of real-world use case Ethereum supporters have been waiting for. Even more impressive, the ecosystem didn't just attract deposits. It attracted activity. Within roughly a week, daily decentralized exchange volume surged to approximately $375 million. That pushed Robinhood Chain into the top 5 blockchain networks by DEX activity. That's an incredible achievement for such a young network. The rapid growth also caught the attention of Hayden Adams, the founder of Uniswap. He pointed out that much of the activity happening on Robinhood Chain is denominated in ETH. Why does that matter? Because increased ETH usage can eventually translate into more Ethereum network activity, higher transaction demand, and potentially more ETH being burned through Ethereum's fee mechanism. In simple terms, more usage can strengthen Ethereum's overall economic model. Instead of ETH simply sitting inside wallets, it's actively powering an expanding ecosystem. This is an important distinction. Investors often focus only on price, but long-term value usually comes from utility. And Robinhood may be introducing millions of traditional investors to Ethereum without them even realizing how much infrastructure depends on it. Robinhood already serves millions of users around the world. If even a small percentage begins interacting with tokenized assets through this layer 2, Ethereum could benefit from increasing transaction demand for years to come. Of course, it's still early. New blockchain ecosystems often experience rapid growth before eventually slowing down. The real question is whether Robinhood can maintain user engagement, attract developers, and continue building applications that people actually use. But so far, the early signs look encouraging. For Ethereum, this represents another example of adoption extending beyond crypto-native users into traditional finance. And that's exactly the kind of growth many long-term investors want to see. Now let's switch to the biggest short-term risk affecting Ethereum. While adoption stories were generating excitement, global events suddenly reminded investors that crypto doesn't trade in isolation. Reports emerged that Israel had shared intelligence with the United States regarding an alleged Iranian assassination plot targeting former US President Donald Trump. Around the same time, military activity near the Strait of Hormuz increased market anxiety. Why is that important? Because the Strait of Hormuz is one of the world's most critical energy shipping routes. Whenever geopolitical tensions rise in this region, oil prices often move higher. And that's exactly what happened. As oil prices climbed, investors quickly became more cautious. Money started flowing away from higher risk assets, including cryptocurrencies. Bitcoin fell sharply. Ethereum also dropped by more than 2% before recovering part of the decline. This kind of market reaction isn't unusual. When uncertainty increases, many investors reduce exposure to assets perceived as risky. Stocks often weaken. Crypto frequently follows. Gold sometimes rises. Government bonds attract demand. It's a classic risk-off environment. But there is another reason why higher oil prices matter. If energy becomes more expensive, inflation can increase. And if inflation remains elevated, central banks may delay cutting interest rates. Higher interest rates generally reduce liquidity in financial markets. Historically, that has created headwinds for cryptocurrencies. That's why macroeconomic events continue to influence Ethereum. Even when blockchain fundamentals remain strong, the important takeaway is this. Nothing fundamentally changed about Ethereum's technology because of geopolitical headlines. The network didn't stop functioning. Developers didn't stop building. Users didn't suddenly disappear. The price moved primarily because global investors adjusted their risk exposure. This highlights one of the biggest lessons for crypto investors. Short-term price movements are often driven by macro events. Long-term value tends to be driven by adoption. Understanding the difference helps investors avoid emotional decisions during periods of volatility. As tensions eased slightly, Ethereum recovered some of its losses. That recovery demonstrated something important. Buyers were still willing to step in after the initial panic. Whether that resilience continues will likely depend on future geopolitical developments, inflation expectations, and broader financial market sentiment. For now, this remains a short-term challenge rather than a change to Ethereum's long-term fundamentals.